Hi guys, welcome back to another video. My name is Josh, and in this video I'll be providing you with a public portfolio update for the month of February on the Sharesies account. Basically, I run this public portfolio and you can see all the stuff that I hold within that portfolio, and each month I provide a monthly update. If you enjoy content like this, be sure to like and subscribe. I cover a lot of New Zealand and investing and finance sort of topics, so if you want to join us, just click subscribe and you'll get updates on future videos. Okay, so in this video there's a lot to talk about. In the month of February, a lot of these companies that I own in the public portfolio report their earnings, so we're going to take a quick look at that. As well as that, we'll be talking about the coronavirus, so headlines everywhere, fear in the market, panic selling, a lot of that stuff is because of the coronavirus. And so we're going to look at how that plays out, what I'll be doing in the coming months, what my thoughts are. In case you're wondering, what should I do? Should I sell, buy, or hold? Basically, I'll be showing you what I'll be doing. This is not financial advice, however. If you do need specific financial advice, seek out from an authorized financial advisor. This video is purely for entertainment purposes only. Okay, so without further ado, let's get right into the portfolio. So here is the public portfolio. Current portfolio value at the end of February is $3,289, with return a loss of 1.37% or $46.35. And you can see this is the 6-month performance of the public portfolio, and you can see that the pink line is basically what the market value of it is, and the dotted lines is our cost. And you can see there's the gap mostly throughout the entire period, and then suddenly we are now in the red. Okay, so we're down $46 now, and just over a week ago the portfolio was sitting at a gain of about $281.10, and now it's at a loss. So that just shows you how quickly things can really turn in the stock market. Okay, and here is what I have in the portfolio. So these are the ETFs in the portfolio: Australian mid-cap, emerging markets, NZ top 50, and US 500. And these are the individual stocks that I own within this Sharesies dividend portfolio. Okay, so now I've basically compiled everything into a spreadsheet, and which makes it easier for us to see what's been happening month on month. Interesting developments that have happened within the month: Somerset dropped in percentage allocation, so that's down 2.8%. The reason for that being that the share price of Somerset has dropped significantly as well. So in the past month, Somerset was at $8.92 per share. Now it's dropped by over $1 to $7.82. And that has to do because of their earnings release, which I'll touch on later. Another one that's gone up is NZX, so that has gone up, and that's because I've been buying stock, taking advantage of the lower stock prices, and as well as the ETFs as well. So that's all been increasing because I've been topping up on these ETFs as the share price goes down. Same as main freight as well. Overall, sort of small percentage changes in the month. Our adjusted return had turned to a 10% loss. Okay, so last month we were at an adjusted return of 7.95, close to 8%, and this month we're down to 2.12. So that's a 10% swing in the portfolio. Okay, so that's quite wild, and a lot of this was due to the coronavirus market fears, as well as the Somerset sort of weak earnings and forward guidance. Somerset makes up one of the largest positions in the portfolio, so when that took a hit, the portfolio took a hit as well. So Somerset announced their earnings on the 25th of February, so just last week. Underlying profit was up 8%, so that's not really that good compared to the past performance, where they've been growing their earnings at about high double digits. So this is a significant drop in their growth. What's more concerning is their forward guidance. So forward guidance is usually what the company lets the market know what they expect the next year's earnings are going to be. And the CEO, Mr. Cook, said the business was not expecting underlying profit growth in 2020 due to the investment in care wages and development margins returning to the medium-term guidance of 20 to 25%. So when you're investing in a stock, and if the stock doesn't grow their earnings, and if the market expects the stock to grow their earnings, then that share price will take a significant hit. And we can see that in Somerset's share price dropping from essentially $8.92, down 12% in the past month. Okay, so in terms of my position, I don't see the need to add more at current levels. If they're not going to produce underlying profit growth, then they don't deserve as much of a share price. But because thinking ahead, Mr. Cook said as well, business expects to return to profit growth in 2021 and beyond. Because I'm a long-term investor, I'm not too concerned about selling the business. I enjoy holding businesses, having the 5-10 year investment horizon period where, I'm not going to sell my stock just because of one bad earnings announcement. Okay. So, but in terms of adding more, I'd be a bit reluctant to add more in the coming months, unless it presents itself as at a more compelling valuation. Okay, so that's Somerset. Heartland Bank as well announced half-year profit. The profit was relatively good, so profit up about 20.4%. It's a bit higher than expected, and that's because last year they had a few one-off sort of impacts hitting the net profit. So if we adjust for that, it's around 10%. So that's about normal for Heartland Bank. And NZX as well announced their earnings, and they had a 7.1% increase in net profit. So very steady performers, these guys, and they'll be paying out dividends in the coming few weeks. Okay, so that is the public portfolio. Those three companies have announced their earnings, and overall, I'm not surprised other than the Somerset guidance. Okay, so that's that. And now let's move on to coronavirus. Coronavirus has taken the financial markets by a storm, really. In the past 5 days, the NZX 50 has dropped 7%. The S&P 500 in the past 5 days has dropped 9.24%. And coronavirus travel ban widens as the first New Zealand case has been confirmed. So on Friday evening, I believe, the first reported case of coronavirus has come to New Zealand. This has really caused a lot of panic in the supermarkets. This was a video footage that my dad sent me on Saturday morning. So this is all the people stockpiling for stuff. And it's just created a lot of fear in general society. And usually this type of fear would lead into the stock market as well. And you can see this sign here: due to unforeseen circumstances, there is currently a 30-minute wait for checkout. So a lot of people rushing in to get their necessities, their toilet paper, their rolled oats. Needless to say, a lot of panic in general, right? People are scared now that it's arrived in New Zealand. And I think in the coming week, because of this, the stock market in New Zealand will take a hit as well. Okay, so that's my expectation, that stock market here would have a bad week in the coming week. Okay, and we can see this translate into the fear and greed index. So this index measures basically that fear and greed, and now is the time of extreme fear. Okay, so there's a lot of people scared in the market, and that's causing a massive sell-off. We're at a scale of 10 out of 100, and we can see this translate into companies sort of releasing a statement, usually related to the coronavirus impact. A lot of companies in New Zealand have customers coming in from China or either supply chain issues. So one of them being Air New Zealand, they benefit a lot from Chinese tourists. So their share price has taken quite a dramatic hit. Okay, in the past month, it has dropped about close to 20%, essentially. And if you remember from last month's portfolio update, I was talking about how Air New Zealand hasn't had a significant drop enough for me to be tempted. And it was at the time about 7.54%, and now it's dropped even more. Okay, so now it's starting for me to get interested in looking at these stocks. And if you look at the forward guidance of these companies, so Air New Zealand had downgraded their earnings because of the impact of coronavirus of between a range of 35 million and 75 million. This is because of basically less people coming in. So what's interesting to note is that the airline announced today that services to Seoul will be temporarily suspended from 7th of March through the end of June. Okay, so that's very interesting because they expect sort of this whole situation to maybe find some sort of conclusion. Maybe they expect it to get better by the end of June. So that's sort of the only timeline that we really have around this situation. I think the situation will have to get worse before it gets better, as any other flu that you have. As a long-term investor, this is where the deals are really. Okay, we have stock prices going up significantly in the past year, and now it's finally taken a meaningful retracement back down. I think there's no point rushing in at this time. The number of cases has still been spreading a lot. So if you're looking to buy at a good price, now is a great time to buy, but I think it's important to have discipline, especially during this time, not to go in all at once. You should slowly buy in as this whole situation sort of progresses and settles down. It won't settle down in the next week, that's for sure, because a lot of these issues, being unable to fly for the next 5 or 6 months, that will slowly play out. So best to slowly dollar cost average into the market, as I always talk about on this channel. It's always good to have cash on hand, and this is situations why we should always have some sort of cash in our portfolio to buy stocks when they drop. So if stock continues to fall, you'll continue to accumulate at a lower price, but if stocks rebound, then you'll be happy with whatever stocks that you've got at this point in time. But it's very important, I'd say, to look at the fundamentals of businesses. Fundamentals as in the valuation of current businesses and whether the businesses will be permanently impacted by the coronavirus. Most of the time, the impact is a temporary one, and once this whole situation clears up and settles down, these businesses would usually come back to normal. Okay, so if you can see that happening, then it is a very good chance to accumulate these businesses at a lower valuation. And this presents long-term investors, really, those investors who have 5, 10, 15, 20 years of investment horizon. That's how long you have in the market. This presents a fantastic opportunity to load up on stocks, which is why really I'm not too sad that the public portfolio has swung on the downside of 10%. I'm not too sad because it just basically allows me to accumulate at a lower price than I would have if the market kept going up. So that's my thoughts around this coronavirus thing. The market is fully in fear at the moment. I think the situation will play out in the following months. That being said, it's very important to stay disciplined. Don't get too hungry too quickly. Slowly buy your way through. Slowly nibble into the market. Yeah, I hope this video had give you some perspective on the entire situation. Hope you enjoyed this video, guys. Until next time, take care.